and buy my books, right? I mean, come on, people. You can be fooled once, it's okay, maybe even twice, but 3 times, 4 times, 5 times by these same charlatans, by their same tactics. I mean, come on. When are you going to wake up? You know, I devoted a large part of my life at a huge financial loss, by the way, to writing America's Financial Apocalypse, which is the book that predicted the depression that we're in. I released that in 2006. And I took a couple of years out of my life to write that. And I specifically, exclusively did that to help people. You will notice in that book there's no mention of, I'm not trying to market myself or anybody else or anything. I don't have any website listed there or anything. Okay, I did that because I remembered how so many people lost their retirement savings through the dot-com charade. And I saw something much bigger coming, and I wanted to help people. I wanted to protect them from this destruction. And people, they got burned in this whole debacle. And then what happens? Well, they listen to the gold bugs now. They listen to the gold doomsday guys, and they're getting taken from them now, you know. And by the time they realize that they've gotten taken by these gold charlatans, they'll go back to the Wall Street clowns and get taken by them again. I'm not writing any more books to the public, by the way, for 2 reasons. Number 1, it's not economically feasible since I've been banned by the entire media. Number 2, I don't want these clowns to get my research and use my ideas and claim it as their own, because they have all the exposure, right? If you have the exposure, you can steal people's ideas and claim it as your own. I'm not going to allow it. So the people who are passionate in my research are going to be on top of the game. They're going to be ahead of the curve.
The Fed is just making it worse.
So is the Fed's strategy creating a stock market bubble? Should investors be concerned?
Well, they're creating a bond market bubble, and they're certainly creating a stock market bubble. The bond market bubble is much worse, much worse, Elizabeth. Yes, they're creating bubbles.
So he's saying the Fed's creating a stock market bubble and a bond market bubble. It's completely false. False. Now, I'll explain why in a second. First of all, I want to talk about Jim Rogers. Jim Rogers is a clown. Okay? Let me repeat that. Jim Rogers is a clown. Jim Rogers, you are a clown. You know you're a clown. You are a sensationalist, moron, extremist, idiot. And if you knew what you were doing, if you had all this money, you're such a great investor, you wouldn't line up like some homeless prostitute for every single media interview, and you wouldn't be writing stupid-ass books. The only money that you make is through promotion and securities and commodities manipulation through the media. That's your shtick. That's your game. Now, the really astute investors out there know this. They know this. Now, there's not a whole lot of astute investors out there. I'm talking about the top guys that are also very perceptive in psychological deceit and so forth. They don't understand what's going on because they sure as hell aren't wasting their time lining up for the media. They know that Rogers is part of this manipulation bullshit. Okay? So what Rogers is saying is that the Fed has created a stock market bubble and a bond bubble. Now, I've said this many times before. For those of you who understand investing, this is not anything new. The stock market has been driven by earnings. Okay? Quantitative easing has not really affected earnings. Now, one could argue that maybe a little bit, there's been an indirect effect through the artificial displacement of interest rates downward, which has kind of pushed people into the stock market through a relative asset allocation. That is to say, treasury yields have been so low that it makes more sense to take risk in the stock market. Now, there's some truth to that, but it's not as if the Fed has been printing money and pumping the stock market up. The bottom line is the main driving force that's pushing the stock market up has been earnings. End of story. Anyone who does not agree does not know what the hell is going on. Period. Now, in terms of a bond market bubble, of course, that's a bunch of baloney, as I said before. But Jim Rogers is saying, well, the Fed has created a bond market bubble that's much worse than the stock market bubble. And the reason why he's doing that, he's saying that, let me explain to you the psychology here. He understands that interest rates have nowhere to go but up. And so therefore, he knows that people are going to be exiting the bond market. And so this is why he wants to say that the bond bubble is worse. You see, once again, it's not a bubble though. It has to do with basic finance. It has to do with risk premiums.
It is not going to be good for any of us. The solution to all of this is not just papering it over, papering it over, papering it over.
So what should investors do then?
What should investors do? They got to play the game. You know, if they're going to print money, you protect yourself by owning things which do well.
Wait a second. They got to play the game. Well, Jim, forget owning. You know, you're going to say own commodities and gold, right? Wait a second. Why don't we just play the game that you're playing? And the game that you're playing to make money is to pretend that you're an expert, pretend that you know what's going on, put on a bow tie, and come out and do all these media appearances. You can sell books. You can make money through selling the rights or licensing your name for commodity funds and ETFs and serving on advisory boards and so forth, and also manipulating commodities, right, and front running. You can do that, right? Like what you're doing, right, Jim?
They print money. You own real assets, whether it's silver or rice, whatever it happens to be.
Rice. Okay, so everyone, go out and buy some rice. That's how you're going to protect yourself. The guy's obviously senile. Rice? And as far as silver, listen, what are you going to do with silver? If you want to buy assets that protect against inflation, and I don't think inflation is going to be a problem anytime real soon. Now, I can't speak of what's going to happen in 5 years or 10 years, but I don't see inflation as being much of a problem within the next, certainly not the next 2 years or 3 years, not in the U.S. anyway. You know, when you're talking about places like Brazil and India and some of those other places where the Federal Reserve and Wall Street are able to really manipulate their economies, yeah, okay, fine. And Iran, of course. Anyway, if you want to protect against inflation, normally real estate is a pretty decent hedge, but we have a just different situation in real estate now. I would not count on that. The best protector is oil. I've stated this many times. Forget rice and silver, it's oil. I'm not going to go into that, but just think the petrodollar, okay?
You own the things that do well when currencies are being debased.
So when will the bubble burst, in your opinion?
Which one? The bond market bubble?
The bond market.
I suspect it's going to be ending soon. But if you'd asked me last year, I would have said the same thing.
Well, hell, at least he's honest. You notice what he said. If you asked me last year, I would have said the same thing. He's honest in that he's basically saying, yeah, I keep saying the same thing over and over again. I'm a broken clock.
It's closer and closer. I shorted a few bonds on Friday just to put my toe back in the water. But I've been wrong shorting bonds 2 or 3 times in the last few years. So don't think I know what I'm doing. But I'm trying again.
You know, it's funny how Rogers, what he does, he's a sneaky guy. Because what he does is he knows the media is going to kiss his ass when they introduce him as some great investor, which, if he's a great investor, what the hell is he doing lining up for media appearances all over the place, right? This guy's spending half his waking time in media appearances. Not as much as Peter Schiff, but, you know, he's spending as much as he can. So he knows the media is going to kiss his ass and introduce him as this great investor and all this baloney. Well, let's see your track record. Let's see your trading. Show us what you've done. Show us your performance, Jim. Okay? Let's assess that performance, right? And in addition to that, what Jim does is that, you know, because he's going to get his ass kissed, he pretends like he's all humble. Well, I don't really know what I'm doing. Okay, so if you don't know what you're doing, what the hell are you doing? Why are you a mouthpiece on the media? You're sitting here telling us that you don't know how to trade treasuries, right? You've told us over and over again you don't know anything about technical analysis, which doesn't make sense if you're a commodities trader. If you're in commodities, you better know technical analysis, or you're going to have your head up your ass getting burned. That's a fact.
Jim, investors are worried about the European debt crisis, and some say Germany should lead or leave to stay.
Remove your top and shut up, okay? That's all you're good for. If you want to get brainwashed, if you want to be... Think of it this way. You've been watching the media, you've been reading the media, you've been listening to the media. If you've been doing it for a number of years, have you consistently made money? Have you made a lot more money than you've lost, right? Have you avoided the collapses and taken part in the soaring markets. No. The media steers you in the opposite direction. They confuse you. They mislead you. You have to understand that. Stay away from the media. You can do much better on your own. Stay away from the online brokerage bullshit. Those guys are completely clueless as well. Do your own thing, okay? If you can find someone that you want to follow that can help you for research, that's fine. But I can tell you, I don't know of anyone else out there that I would trust. I don't want to push myself. I don't want to sound like I'm biased. I'll tell you right now, don't go with me. Just stay on your own, okay? I don't want to make it look like I'm steering you away from the clowns to steer you towards me. No. The message I want you to take from this is stay away from these clowns. You don't have to go to me, okay? You can look at my track record and you can determine if I'm for you. But the point I want to emphasize is I want you to stay away from all these clowns. Stay away from the media. Stay away from all these self-proclaimed experts. Just look at their track. I'm telling you, I have spent many years following all these guys. And I'm telling you, I know for a fact these guys are all clowns. All of them. And the only guys out there that know what the hell they're doing, they're not in the media all the time. Okay? And the vast majority of those guys, they don't really know what they're doing. They're just involved in insider trading. That's the reality. That is the reality, folks.